focus and talk about eClerx. Let's pull up the chart for eClerx and see what that stock is doing in trade, because you've got earnings coming out of eClerx, and largely inline set of numbers is what the company has posted. In fact, the top line and bottom line have also expanded in quarter four. So the quick question now here is, what is the outlook on margins going ahead? And so much to talk about and try and decode the quarter gone by for eClerx. So we've got the Chief Financial Officer of the company, Mr. Srinivasan Nadadhur, joining us on the show. Mr. Srinivasan, hi, good afternoon, and thank you for your time. Let's talk about your earnings in terms of the recent quarter. You've delivered about 18% dollar revenue growth and 30% PAT growth with margin expansion. Can you help us with your guidance for FY27 in terms of revenue growth and constant currency?
Yeah, so thank you for having me on the show. So usually as a practice, we do not disclose revenue guidance. On the margin front, I can, however, say that we will try to keep our margin, EBITDA margin, in the 24 to 28% range. This includes other income.
Right. This EBITDA margin guidance that you've shared, 24 to 28%, I'm just putting that in context with your overall FY26 number for the margins, that's 25.5%. So you are expecting growth on this front. Help us understand what are going to be some drivers that take your margins towards that 28%. That's the upper band of your guidance.
The upper band, we think, is going to be a hard thing to achieve, though not impossible. For us, what we've seen is that the big push to come to margins comes from revenue growth. So as long as we are able to deliver on revenue growth and able to convert the pipeline that we see, and pipeline for us is healthy across all the 4 or 5 industries that we report, I think we should be able to do well on margins. We may, however, set aside some of the margin for investments, especially on technology side and analytics. So we may, decide to keep the margin rather in the middle of the band if we had extra money to spend.
Okay, and what about wage hikes with effect from 1st of April? How are they going to impact the margins once this quarter comes to an end?
So typically, wage hikes for us are anywhere between 300 to 350 bips of impact that we will see in Q1. So wage hikes were completed in April, and we should see this impact on margins in Q1. And usually the way it plays out is from Q2 to Q4, we'll see the margins move up, but Q1 is generally the lowest.
Okay, and let's talk about your very recent large-scale agentic AI win that you've just bagged. Talk to us about the deployment timeline. Has that already begun, and what could be the financial contribution from this order?
The financial contribution is small. This is for the high-tech business, and this is for self-healing and in the telemetry space, self-healing of computing equipment. So overall, it impacts customer satisfaction. It is part of a larger transformation program that our clients are undertaking. And as I said, though the revenue is small, I think it's the first win for us. The deployment has just about started. It should continue for the next couple of quarters. And we are hopeful that we'll be able to build on the success of this agentic deployment and then win more deals on the back of this.
Okay, and Mr. Srinivasan, while we are talking about AI, talk to us about what percentage of your revenue is now AI or automation led, and how much of this can we see developing in the next financial year?
Again, that's a very hard number to call out because we have AI in 2 or 3 aspects. So we have standalone projects like this agentic one that I talked about, which is AI driven. There is AI in our products and services, and that is a mix of operations, so people who are doing things, plus regular technology, which you may call as non-AI work, and there is some bit of AI in it. So to just extract what is the AI portion of that revenue or what AI is contributing is, I think it is one very hard and probably does not serve any purpose. So that's not really a metric that we look at.
Sure, okay, understood. And also talk to us about segments. Let's start by talking about fashion and luxury. That has been weak for multiple quarters. In the commentary, the management has also highlighted that you're cautious for this segment when it comes to FY27. Can you help us understand if the segment has bottomed out and what are some early signs of recovery, if at all, you're seeing for this segment?
Yeah, so FY26 was a hard year for this segment. FY27, the outlook from most analysts who are covering this sector is that maybe there is low single digit growth. We do see some of that beginning to show up in results of our customers and commentary by our customers. So we are hopeful that H1 for this sector will be better than H2 of FY26.
And also, if you could help us now with the current pipeline size, your win rate trend, and the average deal tenure, and how much of that is coming from existing versus new clients?
So a lot more is coming from new clients now, and that's what you must have seen when you in the emerging segment. The deal wins have been greater, so it's the newer clients are contributing to a larger proportion of the wins. I think the deal sizes have moved up, but it is still smaller than what we would like. So there is a focus on winning large deals and cross-selling services from one sector into another. Um, what was your third question? Sorry.
It was just about how much of that is coming from existing versus new clients, which you've answered, and also about your pipeline size, your win rate trend, and the average deal tenure.
Yeah, the win rate trend is not very different, but I think the pipeline is larger than what it was, let's say, 1 year back or 18 months back. And that is contributing to, I think, the growth that we are seeing. So our endeavor will be to continue to keep the pipeline healthy and continue to replenish the pipeline as much as we take out of it. And hopefully that will result in us being able to sustain growth for a number of quarters.
Okay, and Mr. Srinivasan, I'm looking at the BFSI trend in terms of segments. The contribution from BFSI has continuously been on a declining trend. It's at 38.7% for the quarter gone by. What's the outlook on BFSI? How is that segment of the business shaping up in terms of deals or orders?
So the outlook is fairly healthy. In fact, if you look at the full year FY26, then BFSI has grown 14%. It's just that the rest of the business has grown faster. So the percentage contribution shows a declining trend. But pipeline in BFSI is healthy. We are having a number of conversations, especially on compliance manager and KYC related services. And we are hopeful that BFSI should grow as well as the firm does, if not faster.
Okay, and lastly, Mr. Srinivasan, before we let you go, there are so many moving parts with the war in the Middle East. US tariffs also, we don't have a lot of clarity yet over there, while that's also a developing issue. Can you talk to us about what could be some risks for the business as we head into the new financial year?
Right, so the Middle East war is a definite risk. So it could lead to our customers delaying spending or delaying decision making. The tariff also remains a potential overhang. So any decisions that go adversely for us, that may result in lower growth, or any decisions that uh, uh, have our customers reconsider what they should be doing as far as outsourcing or offshoring is concerned. That will obviously have an impact. So we are cautious about these couple of issues, and we continue to monitor them. We are in touch with clients. Let's see how it goes.
Okay, so point taken. And yes, we'll be watching out for the quarters to come very closely. Mr. Srinivasan, thank you so much for your time and good luck for the quarters to come.
Thank you so much.
Thank you so much. Okay, viewers, so that was the management of E-Clerx talking to us about the revenue contributors going ahead, their margin band that they've given between 24 and 28%. Although they expect this number, their margins number, to come somewhere in the middle of this band. They've got a lot of moving factors like wage hikes that that could weigh on their margins going ahead. So that's the guidance that the management is given when it comes to the margin front. Moving on, let's take a look at some of the earnings reactions that we're seeing. It's Gland Pharma. We've spoken about that. It's rising quite well in trade today. So that's the move on Gland Pharma. The revenue is up about 22% on a year-on-year basis. The management is very confident about CDMO becoming their next growth engine. So about 15% jump on Gland Pharma, looking really good. You also have Somani Ceramics. It's looking good for them as well. The management is guided for 20 to 25% revenue growth in FY27. Along with that, you've got a Godrej Industries that's doing well. But on the flip side, it's Hindustan Rectifiers and Bajaj Electricals that are seeing some adverse earnings reactions. But on that note, we're completely timed out on this edition of Markets at Noon. Thanks so much for tuning in. All About Your Company takes all the action.